guys, thanks for joining me on my market report. And my name is Mike. This market report is about mortgage rates. We like to kind of get into what's impacting them on a daily basis to kind of let you make decisions for yourself if you're in the market to refinance or purchase. Kind of give you the trend if they're going up or down, what to kind of watch for, how the rates are kind of what's impacting them on a daily basis. So we kind of want to get that information out to you because we don't really find a lot of news outlets or these things that really kind of cover these. So we kind of want to at least kind of spread this information out to you folks so you can have an idea for yourselves. A little bit about myself is I'm a mortgage loan officer. I do work with a national lender. I'm here to help any way in any capacity, whether it's you got questions about the mortgage rates or the trends and everything like that, or if you guys got my thoughts on, or if you guys got questions about mortgage programs out there or the process. We're here. We can certainly help you if you're looking to refinance or if you're looking to get pre-approved and buy a property. We're here for that as well. We got a lot of great programs out there. You can certainly ask me about our new program we just released. It's called the Physician Loan Program. So you can, if you're a physician or of in nature, so please feel free to reach out on that. We got some great products out there. Without further ado, why don't we kind of begin the report? We'll start off with economic reports. Today we don't have anything major that would move the markets, but we do get by the MBA gives us the mortgage loan application activity report, which kind of gives them every Wednesday. We can kind of gauge as to where loans are at. So rates did dip a bit, but they didn't take advantage of that. So as you can see here from the previous report to this week's report, they didn't. They went downwards. So we had less activity in mortgage applications. So let's take. We also had the 20-year auction. This is passed. It wasn't too good. We'll touch on perhaps a reason for that in just a minute. So we'll jump to the headline news. Stocks are up. They're kind of taking the old adage of buy on the dip. After Monday's dip, they took it back off yesterday, and they're kind of continuing that today. We're still seeing some decent Q2 corporate earnings. There are a few, of course, things that are maybe disappointing, but however, for the most part, they've been coming in pretty good. So it's kind of reminding investors that yes, the economy is growing. We're doing pretty well, considering the Delta variant may not strangle us that much, but it looks like that we could continue to grow. Now, ECB made a decision or announcement earlier today. Well, more at their time, of course, which kind of reflected into which will be what you see in our yields. That they're going to be kind of reiterate the same kind of message that our Fed has been saying, that they're going to allow a little bit hotter inflation. So as a result, their bonds and the rates went up a bit on those, and as you'll see in a bit, ours took a bit of a jump as well. So without further ado, we'll kind of move a little bit further. So here's mortgage-backed securities. We came down as I mentioned yesterday. We got some uncertainty. This could be a trend reversal, and we're starting to see that right here coming down. So right now we're down about 19 basis points, which will translate lenders coming a little worse pricing compared to what we saw yesterday. Yesterday, remember, I mentioned it was better, but then it got worse, which came in the same pricing as what we saw on Monday. So Monday's pricing was equivalent to Monday's. Right now we're down below that right now. The Treasuries jumped all the way up to 1.29. We were down right around the 2.1 earlier yesterday, and right now we jumped up to 1.29. So it's kind of a big jump right there, working our way backwards. All right, so again, mortgage rates did worsen a little bit right there, and that 20-year Treasury, as I mentioned, anything with inflation with a little bit hotter, that kind of usually spooks the market a little bit, and that kind of saw a bit of a jump. And of course, didn't really leave much appetite for the 20-year bond auction, most likely. So anyways, if you guys have questions, please feel free to reach out. We're here to assist you in any capacity. If you guys if you guys like the videos, I'd appreciate if you guys can smash that like button. That certainly helps out our channel. We greatly appreciate you and appreciate your views. You guys have a great rest of your day. Thanks so much for watching. I look forward to seeing tomorrow's video. Bye-bye.